Still keeping an eye on trade talks right now. I believe we have until tomorrow, the Canadians do, to cobble together some sort of a deal with the United States, or they're out of that NAFTA deal. So says the White House here. If tomorrow is the deadline to scramble together some deal with the Canadians, do we have a NAFTA deal with just Mexico? And they wouldn't call it NAFTA. It would be a U.S.-Mexico trade agreement. What are the implications of that? CME Group Chairman and CEO Terry Duffy with us now, reacting exclusively. Terry, good to have you.
Thank you, Neil. Appreciate it.
What happens, first off, if because Democrats have said, you know, there is no NAFTA without Canada, but right now there is no Canada looking to do a deal with us on NAFTA. So what happens if it's no Canada?
Well, I'm not quite sure, Neil. We haven't seen this in quite some time since the original deal was inked back in the 90s under President Clinton along with Commerce Secretary Daley. So we'll have to take a look and see where it goes. But right now, it appears from what I'm seeing is, you know, the Canadian part of the NAFTA agreement, they could still come in. It doesn't prohibit them, even though the deadline is supposedly today, tomorrow, or the next day. So, you know, you could get through the Canadian elections. And I know that the folks down in Mexico are looking to have this as part of their legacy. So it seems to me more of a political timeline than a timeline for a good trade agreement for down the road.
You know, I was thinking of a lot of stuff your exchange covers, a lot of the commodities that have been running up, save some of the agricultural items because of the trade back and forth with China, what have you.
Right.
But we have, you know, interest rates that are in and out of 7-year highs. We have oil in and out of 4 or 5-year highs. And yet stocks continue to do well, all of that. In fact, almost every key group has been doing well. And I'm wondering what you just make of that odd phenomenon.
Well, you know, it's funny you mentioned that, Neil, because I was thinking about this today, and I was just looking at United Airlines is a great example. So the airlines are kind of a good proxy of what's going on. You know, Oscar Munoz has done a tremendous job over at United Continental, and they're trading just a couple dollars off their 52-week high, yet oil is probably trading in a higher echelon. And so that normally doesn't coincide together at the same time. So maybe the price of oil is finding a new normal. Businesses are adapting, they're adjusting. You know, the United States of America is producing roughly 11 million barrels a day on an 18 million barrel consumption. So the rest of the world's producing oil. So maybe this is just a new normal. You know, when oil hit $26.50 a barrel, there was a lot of companies that were in a world of hurt at that price as well. So, you know, I think that's something we need to look at. Normally, the airlines would never do quite this well with the oil prices where they're at. And when you look at the grain markets, you know, the grains really haven't done a thing, you know, over the last 6 months. They're basically in a small range. And then when you talked earlier about NAFTA with the milk and the dairy issues, milk is basically in the same price range it's been since January to date. So, you know, not a whole lot of volatility in these products. And yet we're still seeing the growth in the economy and the stock market. Now, you say interest rates are at 3-year highs, but they're still historic lows. So, you know, to me, it's a pretty interesting time that we're living in.
You know what's interesting, and even I could extend soybeans to that, because that was the first group hit because China would just stop buying soybeans.
Right.
But we're told, as I don't know what's true, you probably know this better than I, that the Chinese have started buying them up again, not nearly in the numbers they did prior to the escalation in tensions here, but that soybeans are very close to getting back to where they were before all this. And I don't know why that would be. Is it a presumption that maybe traders are thinking this never comes to blows, or that the market can absorb all of this, get through all of this, the wind at everyone's back is the improving economy? To your point about interest rates rising and oil rising, it reflects an improving economy, so that wins all.
Yeah, I think that's exactly right. And listen, you know, when we're talking about, you know, food products and how we need to feed the world, sometimes we get, you know, these get thrown into a trade war or trade talks, and then eventually people start to forget about the trade and they think about how are we going to feed the people around the world. You know, there's roughly, what, 8 to 9 billion people, 7 billion people, whatever the number is in total. That's a lot of people that need to be fed. And if you ever have, you know, situations where you have bad crops and things of that nature, these products go away in a hurry. So yes, it doesn't surprise me a bit to see traders bidding these up just a little bit right now, even in lieu of the trade wars.
You know, and I see it usually when we come to the end of a quarter, as we are now in trading, a lot of people reposition their portfolios a little bit. They might say, well, I don't have enough commodities or specific commodities, or I need to have more exposure to what's going on in the agricultural arena, or to your point, the energy arena, bond futures, all of that. How much of that is likely to come into play in the weeks ahead as people sort of rejigger for the final 3 months of the year?
You know, that's another good question. The way I measure that, Neil, is I look at the open positions on CME's books today. Since we trade all the asset classes that you just referenced, so I look at the open positions by the different asset classes. And right now we're sitting at roughly 120 to 122 million open positions spread throughout interest rates, energy, agriculture, and other products and equities. And you know what? All of them are pretty much stable compared to the way they were, you know, a year ago, which is fairly interesting how people are positioning their portfolios, which is telling me that the diversification of people's cash portfolios is also a reflection on the future side. So I think we're already seeing a great diversification of people's portfolios leading up into, you know, either trade wars or elections.
Yeah, well, something is going on behind the scenes. Terry, very good seeing you, Terry Duffy, the CME Group Chairman and CEO. Thank you, sir.